back at it again with another kick-ass guest today. This is a no stranger to the insurance industry. We have the extraordinary Pete Fournier on today, life insurance expert and just general money maker. Like, Pete, if he lost his insurance license tomorrow, he's not going to stop his bougie lifestyle. He's going to figure out how to make money. But today we're going to focus on how to do that with life insurance. So a lot of videos online about selling life insurance. Some of them by people that I don't think have sold that much life insurance, or maybe not done it successfully, that skip straight to coaching on how to do it. We don't have a problem over here at the Insurance Gurus podcast or Bobby Brock Insurance with trying to give away good tips to good agents and bringing more people on our wing, because there's only so much I can do by myself. But if we recruit the masses and collectively find other studs out there that can help us grow our network and utilize these tactics to help more beneficiaries, we can do a lot of good. And so Pete is somebody that I know knows what he's talking about. Pete came down to Tupelo, the big city of Tupelo. He took the journey down
the
adventure, and trained us, and our life sales have gone up because of some of the training we've gotten. And today I've asked Pete to give us some similar training. It's not the exact training we learned that day. That was actually learning how did you call it? It was the Social Security it was a Social
income
Security
protection pitch.
Social Security income pitch. Yeah.
Based on your demographic, that was probably a good idea.
Yeah, absolutely. But one of the ones that really excites me about life insurance, and what really gets me excited, if you know what I'm saying, and life insurance is more when we get into the differences in term, universal life, whole life, and how to position the difference in a way that gets your prospect to choose value over price. And I've seen a couple of people talk about this, but I don't think I've seen anybody talk about it more effectively and better than Pete. And so I wanted to bring Pete on, see if I can get him to go over just a couple of these concepts to hopefully help you guys understand how to position life insurance in a way that makes your client make a wise long-term decision that is good for them and definitely better for you, the agent. Adds more value to both of you, and I'll just say this is just like my early, rambling on it. If you allow people to choose the cheap way out, they will. And that doesn't mean it's better for them. Cheaper is not always better. And so this isn't about extorting more money from a prospect. It's about being able to sell value. And if we just wanted to buy the cheapest term policy, we will be as an industry replaced by e-com sales, because e-com sales do sell the cheapest term policy. That's what they do. That's the whole thing. But insurance companies need us to explain and advise the value of other products, the long-term value of permanent life insurance, and what you're getting long term. And there's a lot of people out there telling them BS, like Dave Ramsey, about different value, different types of life insurance. And then they're 70 and they're in my office asking for life insurance because the term policy Dave Ramsey told them to get it expired, and they didn't invest the rest like he told them to, or maybe there was no rest to invest. They spent it on Cheetos or whatever.
To coin that real quick, there's no rest to invest.
There is no rest to invest. Right. So, the dream was there was rest to invest, but when you're looking at somebody like Dave Ramsey, it's easy to take the easy advice. Spend less money on things you don't really care that much about. Okay, Dave. Hey, don't buy an $89,000 truck, buy a jalopy and eat pinto beans. No, I'm not going to do that, Dave. I'm going to still finance a car and buy a house that's a little out of my price range, because you only live once. but I'm going to buy $19 a month term life policy that expires when I'm just about to the age when people actually start dying. That's what we're trying to avoid. And there's also a great way to explain this other than saying it that way, because actually that's one way. You might lose people in the brashness, right?
It is one way.
But there is another way that actually explains the value. So Pete, first of all, thank you for being here.
Thank you, man.
And how would you proposition the value difference between some of these options? Just take us through it, man.
Yeah, so I mean, picking on Dave and Susie Orman and stuff like that too. I mean, they talk about like riding a bicycle to work and not buying a car at all, so you can invest in the market and buy a $4 a month term policy, and it shows no value. And unfortunately, like you just said, a lot of the times when I'm sitting with a 65, 70, 75-year-old, they'll say, oh, I had this, $1.5 million policy I was paying $200, $300 a month for, and now I don't have it. So let me get that $5,000 a month policy for $300 a month. Like, how sad is that conversation?
Yeah, it's very sad.
So my goal, one of my whys, is to try to get people in as early as humanly possible. I don't like selling final expense personally, not because it's a small paycheck, although I don't like that aspect either. Right? Smaller deal sizes, you got to do a lot more transactions, but it's also sad when you start talking about it. It's hard to push someone into $250 a month for $12,000 worth of coverage to bury them. You're almost like, oh, I wish I met you 40 years ago and smacked you in the face and said this now, So I think the one important part, and like you mentioned, and we've gone back and forth analyzing a lot of these training, quote unquote, videos online. The one important part is to not be biased for or against any product right up front. Right. I see these knuckleheads from which companies saying like, oh, you're a whole life agent or you're an IUL agent. What the hell does that mean? You're an insurance agent. I can sell any product and I could push term if I really wanted to. I could push IULs. I could push universal. I could push whole life. I could push 20 pay. It doesn't matter.
Term. I have IUL. I'm sure you do.
I own everything because you should, right? Trademark pending, so hopefully no one tries to bogart me for this, but you buy term for what if, right? You buy IULs for we hope the market crushes it, we can use it for tax-free life, and we buy whole life for when. So arguably, you should own all three products throughout your life, maybe not necessarily all at the same time, but they should overlap at some juncture, right, during your lifetime. So that's step one, is don't be biased for or against any specific product. You should be able to sell any life insurance product at any given time. My main focus is selling on the end value to the client, meaning what is the policy going to do for them? A lot of people are very focused on the death benefit, right? If you walk down the street and you knocked on 100 doors, I bet 99% of people would be like, oh, life insurance is just for when you die. Yeah. That's the mentality. That's what's ingrained in your head. That's what they see on TV, or they listen to Dave or whoever else, right, preaching nonsense. But realistically, I would argue that 9 out of 10 of the benefits of life insurance is really for when you're alive. The death benefit's ancillary, and it will go to your beneficiaries tax-free, and that's awesome. But you should be using it as a vehicle when you're alive. So I kind of pitch, for lack of a better term, on the selfishness of the prospect. Most people are inherently selfish. We don't want to die. We don't want to think about dying. And a lot of people don't buy life insurance right out the gate when they meet with their first agent, because they don't want to think about it either. Right? Oh, I want to think about what happens to me. What's in it for me? I don't want to spend $100 a month for my family. And sometimes that emotional approach doesn't get too far with people. The empathy doesn't get too far with people. Even when you got Joe and Mary sitting next to each other, they're like, she can pound sand. She'll marry some other guy. So pitch based on the end value of the product. So here's an example. right? And Justin just said term, it might be the cheapest, but it's not necessarily the best. If I'm sitting with a mortgage protection prospect, which is the lead that I like to work, if I'm going to select one, age mortgage protection leads or brand new ones are my bread and butter. So if I'm sitting with Joe and Mary, I might see that they have a $300,000 mortgage. And option one is always a fully underwritten term product for me. I don't want to get into great detail about products and stuff like that, but fully underwritten doesn't necessarily mean they have to get pricked and stuff, right? There's ways to get around that, and there's products out there that are fully underwritten, non-med. So if you don't have that, you can contact one of us because your upline's poop. So you, when I'm pitching them the 300K, let's say it's $50 a month for each of them. I'm going to show them, Joe and Mary, this looks like a really cheap option compared to maybe one of the other three that I showed you. But at the end of this, you're going to pay 30 years, $50 a month, 12 months out of the year. So you're going to be out $18,000 at the end of this policy. I understand it protects you against the mortgage for what if. However, at the end of this, 2% of term policies pay out. I think it's less than 2 now. The stat goes like this, right? Every other year. But about 2% of term policies pay out. So there's a 98% chance that you're going to pay into this policy for 12 months out of the year, 30 years down the road, and you're going to cut checks of $18,000 to the insurance company, and you're going to get squat out of it. So I'll write on my little yellow pad, or now I have a Remarkable. They should sponsor us now because of how many people have them. I'll write negative 18,000 for that option one. Option two for them might be a term return of premium or a UL, something that they're going to break even on. Meaning, I'm going to look at the cash accumulation of the policy, or maybe it is a true term return of premium, right? For the newer agents out there, that's a much easier way to pitch than maybe structuring an IUL or a UL to make it return a premium. But that might be a $150 option, right? So you go from 50 to 150, and people go, oh my God, I can't pitch 3 times the amount. Well, you can, because if you show them 150, and then you say, listen, Joe and Mary, I know it's 3 times the price, but at the end of this, like I said before, 98% of the time, it's not going to pay out. You're not going to die by the time the term expires. You're actually going to get all of your money back. So I'll write a big 0 with a line through it and write break even. So on this policy, you don't gain and you don't lose, right? We'll cut you a check. Maybe you can use it to pay off other bills, student loans that you probably still have, all that good stuff, right? And then option 3 is usually a whole life product or an IUL. And depending on the age of the client, I usually set a threshold of whether I go whole life or an IUL. But that might be $300, $400, $500, $600 a month. And it looks crazy and it's a little bit of sticker shock for them. But all you're doing is looking at the illustration. You're showing how much cash they're going to put in at the end of 30 years, how much cash accumulation is potentially in there, and then what their net positive. So Joe and Mary, I understand this 300,000 IUL or whole life or 20 pay or whatever it is $600 a month. But at the end of this, right, again, most likely you're not going to die 98% of the time. So at the end of this, you're going to get $180,000 back on top of what you put in, or $96,000 back, whatever the difference is in the premium versus the cash accumulation. And I asked them to pick based on the end result. If they still pick the cheap option, it's okay because it's never a no. I don't care, right? They're still protected. And you can't sell stupid. So if they look at that and they say, that's a great deal, that's all right. I'm not going to push them towards the whole life or towards an IUL or towards term return of premium. If they settle for it, great. I'm just a glorified order taker. I'm going to show you all the options and you tell me what you want. That's it.
How often do they pick the middle?
Almost every time. I would say if I had 10 sits, just easy numbers, and I sell 9 of them, right? Maybe one person is ignorant or not qualified to enroll in anything based on health. At a 9, I would say between 6 and 7 would pick the middle. one's going to upsell themselves and one's going to downsell themselves.
Yeah. That's what I think. So when we do, we have a bundling concept with Medicare beneficiaries, and when you're looking at turning 65-year-old, year olds, you're getting to kind of paint the landscape. You're going to have 1 out of 10 downsell, and start picking apart the pitch, and then you're going to have one or two that's going like, holy shit, I want everything, and then most of them are
Right.
going to pick the middle. And that's the design, because yeah, I like the upsell, but it is a good deal to have return of premiums. you know hey, you covered your risk for that period and you came out without having to pay a dime. If anything, you lost the potential interest on that money during that time, but let's be honest here, most of those people would have blown that on something else.
Cigarettes and Mountain Dew. Yeah.
Yeah, exactly. When I got into the business, my dad said, "Don't focus on people under 40 because they'd rather buy a four wheeler than a life insurance or a health insurance policy." And so, the niche, and you tell me this is probably good information for people when you're looking at life insurance. Um, you know, and you're doing under 65, right? To
Mhm.
avoid the final expense market. What do you still think is kind of the golden, like, age group that you're running into that's actually that you'd rather work?
Yeah. So that 25 to 45 is awesome.
Yeah.
Um, they kind of get it depending on where you're working in the country.
Mhm.
Like some 25-year-olds in middle America have 4 kids and a house and all kinds of stuff,
You talking
right?
about Defiance, Ohio?
Yeah, exactly. Now, if you're in, my hometown in New Jersey, we sometimes wait till we're 40 to even,
Yeah.
start dating somebody. It's just different
Yeah.
stigma based on where you're at in the country. But yeah, that 25 to 45 is great. One, it's a great price point because a lot of newer agents are like, oh my God, it's $400 a month. The premium doesn't matter ever. So to get over that psyche that you may have of I can't pitch anything over 100 a month, well, that 25 to 45 age bracket's going to cater to that all day long. You can pick up $85 checks if you want. That's okay, right?
Yeah.
Because they're going to fit within that wheelhouse. But I like that age group too because you can stay nimble and most of the time they qualify health wise, hopefully, right? It's not a sad situation where they maybe have an underlying health condition that early on in their life. But they typically qualify for any and all products. And you can kind of move stuff around based on their income because that's your premium working years, that 25 to 45. So they can afford to throw some stuff at maybe an IUL or a whole life or whatever.
Yeah. So now that you can write, I mean, like, and this happened to me, like building a portfolio over time of things you can help with. Started off, um, you know, I did start off Medicare right out of the gate. I was a med sup guy. Was going off, started off rewriting med sups. Then eventually, we had to learn how to do the drug plan concept. And then I started getting asked about health insurance and term life from young people that were my own age group, just my general warm market. And when I came in, my dad was, an old school med sup only agent. He didn't even certify to write the drug plans. He just was enrolling them for free, doing things the old school
Wild.
way. And uh, he said, "Don't waste your time on term life. Don't waste your time on health insurance, any of that." Well, I didn't listen to that because I needed money. So I was going to help. I didn't, if it was $80, I was going to help them to figure out how to make the $80. Plus, I was like, well, I get to learn something in the process, and who knows, that might turn into way more. So I remember just in that warm market, I started doing term, and then wasn't long until a buddy of mine who was a contractor needed a $5 million death benefit because he owned, like, he had like a $2 million loan for like some building projects and some equipment and all these things, and he needed a large death benefit. And he was my age. He was like year or two older than me. So at the time he was like 30, 31. And it's crazy, actually kind of a funny, crazy story. Guy got shot in the neck a year earlier in a hunting accident
Oh my God.
and was in the hospital for like 15 or 20 days. Comes out, no real health issues other than some nerve damage. Had to take a little gabapentin. He actually quit doing that and started smoking weed because the gabapentin was giving him erectile dysfunction. So I totally
Great drug.
supported that. I'm not a big
Great.
weed supporter, but like in that case, I'm like, yeah, I'd rather smoke weed than have ED. but anyway, we're going through underwriting. I wrote him an AIG $5 million term because he's so young, and I revert him preferred plus. It was like $200 a month.
It's nothing.
No,
And
it wasn't anything.
The key to that too, and why I don't mind locking in the cheap rate, right? If you downsell yourself,
Yeah.
I've been selling since 2011, technically, right? Late 2012, I went independent and had a slew of products at my disposal. But I've probably converted 80 to 100 of my existing clients when I wrote them in 2013 a term. And now it's time, Joe and Mary, to convert that baby to whole life or to a permanent product, UL, whatever. And you can do it in chunks. So that guy, maybe he starts reaching 40, 50 years old. He's on a couple medications and you're like, hey, bro, it's time to get $1 million whole life and let that term fall off whenever it falls off because you don't need it anymore.
I mean, heck, like even in what happened too with him, I reached out, let's see, I'm 33 now, so he's 35. About a year ago, I reached back out to him and I'm looking at I'm like, dude, we at bare minimum need to reset your term. Like you're still really healthy. You're still in an age bracket to do it. I think he's like 4 or 5 years in, to this. So now it was a 20-year term. So he's got 15, 16 years left on it. I'm like, you still have a lot of debt obligations. You're still running a big business. Let's reset that term 20 years out is like $20 more a month. And I'm able to rewrite it. I'm like, you say there's no renewals in life insurance. It's kind of like real estate. You get a client base, or car sales. You have to get a client base. You have to go through that, that client base and do it, but and I had actually talked to him about participating whole life. I didn't know enough about it at the time, so it was hard for me to position it. And he's a real estate guy, so he's like, well, I can get X on cap rate, blah, blah, blah. What about, I'm like, dude, I don't know. Just buy the term. It's fine. He was asking too many questions and I was like, all right, we know what you need it for. We'll keep selling you the term. But the cool thing by building the term, I learned ACA when it first came in with Obamacare. Now from you learning more about Social Security income protection. Over time, I started learning the annuity pitch because people started coming to us from multi-year guaranteed annuities. Well, then I was like, well, the commission on these is crap in comparison. What's the purpose of an index? And I learned index annuities. But sometimes people come in to the market and they're like, I want to know all of what Pete knows. Well, that takes a long time. It's not like Pete can just be like, it's not the Matrix where you can be like, all right, take what Pete knows, take what Justin knows. Now I know it all. Because if that was the case, nobody could plug into my head because I don't want you knowing all of my stuff. But no, it just takes time. So if you were coming in and you had to learn 2 to 3 products right away, and I'll tell you, if I was starting over, and I would definitely pivot quickly into learning more stuff, start learning, but I would definitely go for a term IUL or term whole life approach right away, because that's the fastest way to get my revenue up so that I can then start building a business around it. I would, if I was starting out, and I started MedSup, but I would start life and then pivot into Medicare as quickly as possible.
Yeah, and that's what I did. I sold life insurance for almost 10 years and my renewals are pretty fat, but they're not as fat as yours. So I was like, oh my God, what do I have to do to create this longevity? And now I'm pivoting hardcore to Medicare. But that immediate cash flow did not suck for a decade.
Yeah.
My story, but maybe some of the viewers, I was 50K plus in roll-up debt, plus student loans, plus normal day-to-day bills. So probably over 100K. I got out of that in 18 months, selling life insurance because of that upfront nut. So if I was starting again, I really wouldn't change much. I started as a captive, learned all I could for about 2 years and then went independent, which was kind of good. I know people talk a lot of smack about captive, and sometimes so do I, but it was a good learning experience. But I would keep it really stupid simple. Arguably, nowadays you could pick one carrier and
Mhm.
probably have a term return of premium, and an IUL, or
Yeah.
a term return of premium and a whole life, right?
Yeah.
All in the same carrier. You don't have to leave the quoting tool. Maybe it's not going to be the best thing in each product category, but as long as you're in the top echelons of carriers, who cares? It doesn't matter. I think too many insurance agents get caught up with, well, he didn't qualify because of this. Like, where else can I write him?
Yeah.
Honestly, move on,
Yeah.
right? My first year or two was cutting my teeth independent. I had two carriers and then eventually three. And if they didn't fit within the wheelhouse, I walked out of the house and said,
Yeah.
sorry, you don't qualify. And I kept them on a list for when I did get a product that I could go back. But I didn't like spin my
Absolutely.
wheels and be like, oh, where can I get them fixed? And then I'm not making calls because I'm worried about underwriting this case. Like, forget that. Just run
Yeah.
with one or two carriers that have all three product options, slay it for a couple of years, and then, as Justin said, expand your knowledge in your portfolio.
Yeah. If I'm starting out, you know, two carriers, one of them's going to be high name brand, like Mutual of Omaha, just so I can, that helps me sell because
Yep.
it's transferring the confidence while I'm building my own. And then the other would be somebody that had great, probably a better product like National Life Group, or, somebody that's going to take more things and has maybe some other products out there. Um, and that's just would be my strategy. And then I would build to it slowly. But even now, like when we built this, decent size agency, and I
It's
want my
pretty big.
guys. It's pretty big. It's doing well. It's a machine now. But when we look at our agency now, when I'm training guys, I get them all the time. Hey, can I get Boo Boo Kitty, freak? I won't say. I'm trying to keep it PG here. Even though
69 at
yeah,
AOL.com.
yeah. But can I get Tutu Kitty Cat Ink Carrier? It's a B minus AM Best. They have this niche, hearing policy. Like I no, like we're not going to do that. I'm going to try to keep it a wheelhouse. And I actually used the wheelhouse back when I was training my initial, like it was just a few of us at the time, and I was still the leading agent. And we started trying to do trainings more often. And was one of the first trainings I gave them was a wheelhouse. I was like, this is our best, ancillary company. This is our best. This is the MedSup. This is the backup underwriting MedSup. This is the life policy. This is what we write. And I had basically got it down to 3 or 4 carriers. And if you look at my DOI, appointment sheet on my personal one on like DOI Mississippi, we are my biggest for sure. I probably got 100 carriers on there, but it's not. It's gosh, man, like most of them I could do without, and you can keep it in that wheelhouse. It's too difficult to learn all those. Like the amount of goofy information I have in my head about niche little products that I make $3.58 a month off of because one agent picked it up and wrote 6 policies 3 years ago is goofy, and I was doing it. And I mean, I'm not saying I'm not mad that I learned it, but the average agent does not need to know everything that I know about carriers. And then so many people that have write jack squat for production, they have no production, almost no production, very little. They want to know everything I know. They want to know everything you know. They want to know everything that people that know more than us know. And they're so getting in their head that they can't just present what they do know over and over and over again and pick up little nuggets along the way to get better and better. But enough. And I tell this to my guys, I'm talking about 45 days into training with us. I'm like, more than 99% of the potential beneficiaries and clients that you're presenting to. And I try to instill that confidence early on, like, more, like 45 days in, more than 99% of them. Hell, a weekend, more than 50% of them. I mean, because people don't know anything about insurance, so it doesn't take much before more than them.
Oh, yeah.
And the only way to learn all those incremental things is to practice And for me, and this is I guess is the difference. I think probably if somebody asked me what trait makes a good insurance agent, we get asked these things all the time on panels, and just my answer has evolved. But one of the answers that I think is top notch is what makes a good insurance agent: someone that admittedly learns best by doing. Because if you think you
1000%.
if you think you learn best by reading about it, you're probably not going to make it in this racket. You got to go and do it. Like, you're not like, I mean, because you consider there's so much to read, so much, and there's so many videos online. One thing I like about David Duford, I was interviewing him the other day, and he said I try to tell people to stop watching videos, which is stupid because I've got a lot of them. But I'm like, there's a point when you don't need to watch any more video. It's like, and you guys, some of you might be watching this video or listening to this as a podcast. There is a point where, of course, if you're riding around, I love like the University on Wheels concept to learn about while you're just riding with your empty time. But to spend time going and looking up videos and stuff when you could be prospecting, huge waste of time. 8
I'll tell
a.m.
you,
to 5 p.m., no learning, only
no.
prospecting.
Good quick story on that. So my first year independent, there were some leads in Philly, like age leads, whatever. So I bought the inventory. They were like $1. This was like 2013. Don't think you're gonna get 3 to 9 month old leads for $1 anymore. But it was like 2.5 hours from my hometown, right? I moved back in with my parents because I was in all that debt, and I was like, screw it, I'll drive to Philly and write. Well, back in the day, they didn't have a lot of e-apps. So I wrote paper apps for everything. And I forgot one freaking questionnaire. And I never forgot that questionnaire ever again because I learned by doing and screwing up. And a lot of agents today want everything instantaneously, right? You want all that knowledge matrix into your brain so that way you don't forget in a house or you don't know what not to say or what to say. That's how you learn. You make the mistake, you fall on your face, and then you never forget it ever again, as opposed to thinking you have everything right up front,
Did you listen to you probably know this story. You've hung out with James Whitley before, haven't you?
Yeah.
Did you hear our interview the other day? I don't know if you heard it, but so James, when he was talking about starting out in telesales, he found some carriers that were like, yeah, we'll start allowing some telesales. We're interested in telesales. And the craziest thing was he was doing paper applications with voice signatures by burning the CD and sending it with the paper application via mail to the carrier. And now people are like, the formatting on the e-app doesn't fit my iPad mini. Like, get a MacBook. Like, what are you? Shut
Surface
up.
Pro, do something. Stop complaining. Shut up.
Bad. I'm like, this guy's literally going and getting the thing of 250 CDRs, cold calling data, selling a life policy, writing out the paper application, burning the CD, putting it with a case, and USPS mailing it to the carrier. And mine wasn't that bad. I think I started a couple years after him, so there were starting to be some e-apps, but most carriers still had. A lot of them didn't have e-apps yet. Some of them did. It was a mix. But I was going out in the field too, and so internet connections, and we didn't have tethering didn't exist. We didn't tether off our phones. I think I had an iPhone, but it was like an iPhone 4.
Yeah.
And so when I started, I was going out and I had a file box. I don't know if you guys did this, but my dad told me when I started, and
I had the milk crate.
Your dad was in insurance too, right? So that you sometimes you could get certain tips from dad, and some of them are so archaic. But I did it. I got you can go to Office Max, and it's like a milk crate, but it allows you to have the little hook files on the box.
Yeah.
And I had all these green folders in there, and I'd have the applications for the. And so when I first started, he was like, "Oh, you'll probably need this company, this company." what happened when I went out? I probably wrote 2 companies all the time. It was like Manhattan Life, AARP, Manhattan Life, AARP, because that's all I knew. It was like, "Oh, you can't qualify for Manhattan Life? We got you AARP." And I would just keep, doing that, but I had all these files in there, and it was all paper apps. And then, yeah, if I came back, you'd come back, you forget one signature, you forget, one little checkbox. You never forgot it again because now I got, and I didn't have to do 2.5 hours to Philly. I think the furthest I was going at the time was probably about an hour and 15, hour and a half. But when you have to drive, at least Philly, you could go have a nice, cheesesteak when you're there. I was driving an hour into the direction of Vardaman, sweet potato capital of the world. There's
Uh,
nothing down there for me to do. So it was like an hour down, sign this, got to get back to Tupelo, where there's actually some civilization. But yeah, man, it's crazy how much people want. So I mean, this video for anybody that's watching, I mean, the life insurance strategy that Pete's talking about, you can get 2 or 3 carriers. You can talk to Pete. You can call us. We can work. Me and Pete work together. I asked for him for advice a lot on the life. That he's definitely one of the life experts in the industry that has actually sold the stuff. Um, and there's a tremendous amount of value there. So if you watch this and you're new, you know, think about that wheelhouse. Focus down. Don't complain about e-apps. Have I mean, I'm telling people to use e-apps, but I'm like, if you're new, the e-app not working should not prevent you from getting a sale. Most of these carriers still do have a paper app. If I'm out in the field, I'm gonna have some paper apps available. I just am because, and I'm like, yeah, the e-app works, but I'm in Mississippi, brother. Like, and you're in North Carolina now, like you're gonna run in. I mean, even in Jersey, you got to run into some dead spots out there.
Oh,
Like,
all the time. I was in Maryland for the first part of AEP, and my thing didn't work 50% of the time. Like a new agent would be like, "What do I do?
yeah,
Do you have paper? No. Well, then you leave the house and then you
yeah.
go to
I
Staples."
I'll tell you, people can say what they want to about this, but people with iPad Pros, man, that was not a thing when I came in. Like iPad Pros or a Surface Pro, where you can like take a technical signature and use like some sort of docu thing to move it, and you could tell the client what you're doing. Like I don't have the exact app, but I mean, I'll say this: I was out, I'd had the wrong application. I'm like, this is the rate for the company. This is the wrong application. We're going to fill it out because it's got all the same information and we'll transcribe it over to the other application later on. I mean, I don't know, whatever. If the DOI is listening, I was telling them what we're doing. If I'm out an hour and a half from my house, I got the wrong application. It's the same shit. I could call them back when I'm over and be like, oh, by the way, this disclaimer is on there. You still good with this? But you cannot, like, you have to have a way to collect the right information to present the right product and to do it. You cannot let an e-app stop you from, this career,
And if you're new, I'm sure you have a lot of new people, at least within their first 12 months, viewing this podcast or listening to it at least. If you're new, simply focus on activity because stuff like we're joking about right now won't matter. I was running 30 or 40 appointments a week. If I had to leave a house because someone didn't qualify for a product that I only was writing 2 carriers, I didn't care because I had 39 more people to see.
yeah,
Similarly, don't focus on, oh, who takes gabapentin? I don't
yeah,
even know.
yeah,
But I sell more life insurance than probably 90% of the people out there because it doesn't matter. You can Google that. You can
yeah,
look it up. If you focus on activity and sales knowledge, how to pivot, how to conceptually sell, how to bundle if you're selling Medicare products to turning 65. Focus on the activity, money making activities versus the technical crap because it will come to you. You don't have to
yeah.
know any of that stuff.
And it takes time. Like this idea that you like, when I say I wrote 114 applications one week last AEP, or if I say, I have agents in our office this AEP writing 50 applications a week, like and I would say like the average agent's writing in ours is writing 20 a week, like that's more, average, but that is in a no prospecting environment. And the higher end agents in our sphere, like same amount of lead flow. The person that's been with me 3 or 4 years, completely indoctrinated to learn every scenario known to man over a period of time is the one closing 50. The one closing 20 is new. Now, what's the difference? Another matrix reference. Neo looks at the screen, it's a bunch of green numbers. Okay, that's a new agent, a newer agent. He's seeing that. Eventually, Neo becomes the one and he says, I see everything. So when I do 114 applications 7 or 8 years in, every single person I sat with for the most part, I saw a path to securing more, covering more risk, helping them, and getting another application. I could not. I could have sat with the exact number of people my first, second, or third year in the business. There's no way I would have written as many applications. You see more things now, but the idea that you can learn all that right away is stupid. You can't. It just takes time and it takes muscle memory. So muscle memory isn't done by reading a book. It's unless you got some kind of crazy photographical memory. And spoiler alert, you don't. So stop. You can only do this by exercising muscle memory to I've been through this before and I know this is a better outcome. And it also gets to the point where I mean, guys, the number of people I was seeing, I could sit down at certain points and look at a medicine list and already know what plan they need. And if I'm working the same area for a long time, it got to the point where I'd be like, okay, I know that doctor's in the network. I know this doctor's in the network. I know I'm doing Medicare Advantage. I'm doing drug plans. I'm doing med subs. I've looked at it. I would know the underwriting data, but there's just so many people. So the idea that somebody could do that without 7, 8 years of muscle memory to train them to do it. People are like, oh, it takes me an hour to sit with somebody. What are you talking about? Okay, if you're in a call center and you're talking to a guy in Nebraska, it's the first time you've ever heard of this town, Butthole, Nebraska, and you're selling a Medicare Advantage plan there, you're like, I'm going to look up all the doctors. That's not me. I'm looking at people in a 1 hour radius of where I'm at. It doesn't take me that long before I know every freaking doctor. I know every freaking drug. Very rarely, I mean, it gets to the point where I'm not even having to look this shit up. I already know what you need. Okay. And with life, it's the same thing. Life underwriting, I already know who's going to take you. Like, I don't need to go and like, let me call the underwriter. Let me like that's and so, but in the beginning, you have to do some of that, and that's
And
okay.
people will say, well, I got, I even have new agents on the team sometimes. So I got hung up on the e-app. You know how I learned myself? Every new carrier I got, I wrote myself. Maybe you don't want to get the actual policy, but write the damn app
Yeah,
one time. And
yeah.
then you automatically know how it works.
Some of
And
them
that's
have a
that's the
sandbox
only
mode.
practice.
Some of them,
Yeah.
like Aetna has a sandbox mode. I think Mutual of Omaha is big carriers definitely have a sandbox mode. You can literally do an offline app and go all the way through completion without it. But even if you don't, I actually do write myself a lot of policies, or my wife. I mean, she's had hip plans, cancers, dental, like everyone. I've just write it on her just to get through it. But yeah, definitely do that. Um, and definitely don't get hung up on all the little things because muscle memory. I mean, e-app for me is like, I mean, and when I get a new carrier though, it's the same way. I'm just like anybody else. I'm like, oh God, this stupid e-app. What is this? Screw this carrier. We're not even going to write this. Let's go back to writing these that we already know. It's such a pain in the ass. And so only by real necessity do we learn any new platform. Like it has to be like we have to have this or we're gonna suffer. If it's not, I'm like, yep, don't need that one. It's $1 cheaper. Who cares? It's $1.
And honestly, look at the carriers and look at the companies that have been killing it for 200 years. New York Life has one product. Northwestern Mutual has one product,
Yeah,
right? It's ridiculous. And they still have people, you can make millions anywhere, right? Granted, I love the independent side. I think you should go independent at some point in your career. However, there are people at captives that sell one term and one whole life for their entire freaking life
and do very well.
and do very well. Do the same thing, at least in the beginning.
Yeah,
Jesus.
yeah. Definitely, product selection and product knowledge is not what makes somebody successful. Not saying you should avoid it over time, but you have to learn it incrementally by practice and by necessity, not by sitting down and studying products. I don't sit down. I'm not saying I wouldn't in the first, year, like do a little bit of studying and things at night, but I don't sit down and learn products at night now. I do
No,
something
I had
else.
a shameless plug for your conference, Medicare Con, right? April. But last Medicare Con, more of a med sup guy and whatever, but he came up to me and he was like, "What do you think of the crediting rate on this IUL?" I was like, I've never even heard of that, and I wouldn't even be able to entertain a conversation about this. I don't give a shit. Doesn't
It's
matter.
it's crazy. It's crazy, but no, actually, definitely some shameless plugs. If you guys are looking to get in touch with Pete, you can go to petefournier.com. He is going to be one of our keynote speakers at MedicareCon, MedicareCon.com, the 21st through 23rd of April, 3-day conference in Birmingham. It's going to be awesome. Great golf there for men and women alike. Guys, we really appreciate you subscribing to our podcast and our channel and leaving us a 5-star review on the Apple or Spotify podcast platform. It's super helpful and helps drive us to more people, where hopefully we can create a bigger and better community, because the more the merrier. So thank you, Pete, for being on today, man.
Appreciate you.